and what some of the world's really, I guess you could say, foremost proven with track records uh, have been doing with metals and what they are going to do with metals, what they say they're doing. And I think it's important to sometimes look at some of, rather than an opinion on someone who is a good talker, how about the opinion of someone who's actually managing money successfully? So I think that's a big distinction as to sometimes how to help filter the noise and uh, stick with what works. But beyond that, there are signals in the global macro landscape. So that's what we follow closely, and it helps us maneuver, I guess you could say. So we're going to look at a bit of what's happening in the gold market, some of silver. We kind of have a mystery market we're going to talk about, and then also we do any market, any futures market, any futures options market as well, not just these that we're talking about in particular, but we do have a unique technology for options trading to provide some automation with stock indexes. So we'll just briefly touch on that, but really the main focus is going to be on the precious metals, and hopefully it'll be a little bit informative and informative and also valuable and a little bit entertaining at the same time.
Yeah, yeah, absolutely. Yeah, to your point, I mean, in these political times, you turn on the news or you turn on social media, and it's easy to get scared, right? There's all this fear in the marketplace. What's going to happen next? But to quote, one of my mentors, Warren Buffett, when there's blood in the street, that's when there's opportunities, right? When everyone's all happy, it's not really the time to buy. It's really the time to look for opportunities in the midst of chaos. And
Right.
I guess for people, there's going to be people on this that are from all different expertise levels. For people who don't know, what are futures, right? Can you explain what are futures, what are options? Really high level, really quick overview. Because we actually have a partner who sells precious metals. Shout out to Liberty Capital. And they reached out
Right.
and they said, "Oh my God, are you selling precious metals with a new partner? We just announced our partnership with Mar-a-Lago." And I was like, "No, no, no. This is futures. So this
Right.
is trading in the commodities without actually having to hold the gold or hold the silver or the precious metals." Can you explain what are options, what are futures, and how do those markets work?
Sure, very high level, and we'll have a few more details, by the way, when we get into the presentation. But at a very high level, the futures markets are simply a derivative of what's happening in the cash market. So it's just another way to approach and have a position in whether it's the metals or any other commodity for that matter. So
Oil, right? You can speculate
yes,
on
any other
oil,
commodity such as
wheat, all
crude
sorts of,
oil, corn.
yeah.
It also includes currency markets. It includes financials like treasury bonds. It includes the stock indexes, S&P, NASDAQ. Those are all futures markets as well. So it's another completely separate landscape from, for example, not only the physical markets that you might find in precious metals, but even with securities. It's distinct from securities. It has its own trading exchanges. The world's largest exchanges in terms of dollar volume are futures markets. People don't realize that, but that's really where so much activity occurs, and it's right in front of our face. And sometimes we don't realize it, hiding in plain sight. But it's just another way. There's a lot of liquidity. There's some different advantages, and I'll kind of touch on that in terms of comparing securities to futures and futures options. But just an option is an option. If you have options on a typical stock, you're familiar with calls and puts. Same thing applies. You can have calls and puts on crude oil futures contracts, or stock, the S&P 500 futures markets, or even silver futures or gold futures. The bigger difference would be, and again, I'll look at this in just a second here with more detail. But if you want to buy a gold ETF, GLD is a big one. I'm sure we probably all heard of that. That's all good and well, and you can do that. And if you want a $10,000 exposure to gold, you have $10,000 in your account and you buy that GLD. In futures, you don't have to use $10,000 to control an equivalent amount of value. Usually, maybe around 10 to 1 leverage. So it's important to remember that leverage works both ways, of course, but still, it's a very powerful tool where you can have access to these markets with much less capital. They call it capital efficiency.
Very cool. Very cool. Yeah, there was actually a report I read recently around silver that was very interesting. And they said that there's an echo. I mean, I don't hear an echo, but there might be in this room. Um,
Sounds
but,
okay to me.
silver is used for like all this stuff, right? So it's used for like smartphones and computers and batteries and solar panels, right? Silver is used for all this cool stuff. But a lot of the silver trading that happens in the US is actually speculative. So they're trading silver, but they may not even have the silver to back up those contracts. And then when it is time to buy silver and those contracts come to roost, we've had China who's been hoarding physical silver and kind of pushing that price up. So it's very interesting, and I know you want to get into your presentation so we can share, but there's all these real world implications to what's going on. Same thing happened in the oil market
Right.
during the pandemic. We almost hit, I think we almost hit negative oil at
We
one
went negative,
point
yes.
because it was like, okay, we're going to deliver you all this oil. And it's like, well, I don't have anywhere to receive it because the world was shut down at that point. So, when we're going into these global conflicts, this is a way to participate, but without kind of participate from home, without actually having an oil tanker, right?
That's right. And that's a big distinction. I could have mentioned that, but whenever you trade futures, you never plan to actually take delivery of anything or make delivery of anything. You're just buying and selling before that contract comes due, and the price moves up and down, and you're just trading and speculating. That's our role on this side. There's speculators and there are hedgers. Basically, we're on the speculation side, as would probably most of your audience. So, unless you own the actual commodity, you're probably a speculator.
Very cool. Well, Eric, thank you again for your time for coming on and doing this. I'll let you get into the presentation,
Okay.
and really excited for this partnership with Altavest and for you sharing your time with us today.
No, glad to be here. It's always fun to go through these presentations with you guys and you and Gabby and your team. You've got a lot of good people working there. So, all right. You should be seeing my screen. And if not, I guess you'll let me know.
Perfect. Yeah.
Okay, we call it Gold Rush 2.0. You want me to go ahead and jump on in, Tony?
Yeah, let's do it.
All right.
And
So,
everyone, if you have questions, type them in the chat. This is interactive.
absolutely. Stop me anytime. It's very, very casual here. You know, I'm not I'm not one to turn away a question. So, okay, how the smart money is positioning for what we I guess could call the precious metals boom at the moment. And before we get started, do take a look at the risk disclosure. You know, we are regulated as a brokerage firm and we have a lot of compliance to contend with, but it is important. You can take a screenshot of this if you want to read every detail later, and that's fine. But really, the main thing would be when you're speculating, you should be using risk capital, and past performance is never a guarantee of future results. So, with that said, we're going to look at just briefly touch on who we are without going on and on. Key factors we talked about: central banks, inflation, monetary policy, export controls, industrial demand, supply deficits many years into the future. What's the size of the opportunity in gold and silver? Could prices double, triple, quadruple? We're going to look at some specific contracts and examples and illustrations on actually how to get involved. And maybe the biggest opportunity that no one is talking about these days, but there's a famous money manager or two that is talking about it. Then specifically what we offer, you know, we do private coaching, we have research, education, personalized trading, we have technology too for automation, and then we'll look at how to get started. So again, we founded in 1997 and we're located in California. We've traded tens of millions of contracts along the way, and we're a futures and options brokerage. We're registered with the CFTC, Commodity Futures Trading Commission, and members of the NFA, or National Futures Association. And I'm Eric Gebhardt. I'm a co-founder of Altavest and my BS in Business Administration from the University of Southern California. And actually, that's a picture there from the Latino Wall Street event in Miami. So that was a lot of fun. Okay, I've had various securities licenses over the years. Currently have my Series 3 commodity futures license as well as the Series 65. That's for investment advisors. Okay, maybe you've seen us. We've done many presentations over the last few years in particular. We used to do a lot of things in person, but now we do a lot of things via webinar like this. Sometimes we get quoted in the financial press. Here's something just from the other week asking us about our opinion on, believe it or not, silver and gold. So we'll be talking a bit about that. They quoted a business partner here, Mike Armbruster. And so maybe you've seen us, and if not, we're glad you are here. So key factors, there's inflation, central bank demand, monetary policy, export controls, industrial demand, and then production deficits. So what is inflation? Here's a definition. Keep in mind that consumers don't produce inflation, producers don't produce inflation. It's only produced by too much government spending, too much government creation of money, and nothing else. So that's something I think that's important for us to kind of keep in mind. Where does price inflation come from? And when we speak of inflation, I know we use that word referring to prices moving higher, but really inflation is about inflating the money supply, and that results in prices moving higher. So basically all the stuff you need for everyday life increases in price faster than your wages. So you got that inflation shark chasing you. And this is a good illustration. In 1978, if you had a dollar and you put it in your pocket, it's now worth about 19 cents. So I think we all are aware of that. We see it every day, but we kind of illustrate a little bit of tongue-in-cheek humor. I remember as a kid, right? This would be $1 million house, and now this is your $1 million house, especially out here in California. So, and then here's an illustration of kind of what we just mentioned. You have the U.S. Debt, the red line, continually moving higher, kind of regardless of who's in power, politically speaking. There's maybe some fractional, marginal differences among the two parties, but meanwhile, of course, as that occurs, the value or the purchasing power of the dollar just continues to diminish. So federal debt and spending is a big, big impact on the value of the dollars in our pocket. Milton Friedman, again, he points out inflation is made in Washington because only Washington can create money. Congress has the power to coin money. So too much government spending and too much creation of money and nothing else. So that's what's behind the issue. And in fact, it's common knowledge the target for inflation every year is 2%. So they actually want you to get, you know, they want to reduce your purchasing power by 2% every year. That's their actual plan. So you got to think about that. What do you do to overcome that? So here's also central bank demand is surging. Here's a quote from Greenspan, and this is a few years ago when gold was at $1,800. But he said, if gold is such a relic, why do central banks and the IMF still hold over $1 trillion of gold? If it's meaningless, why is everyone still holding it? And that $1 trillion is probably now, well, gold's tripled since then. So you're talking over $3 trillion now in value. And meanwhile, they've been actually buying more gold. So it's probably, 4 or 5 trillion. So here's a chart. I couldn't find something putting together with 2025, but you can see global central banks are ramping up their purchases of central gold. And why is that? Quite frankly, they don't want to hold depreciating dollars. So they have to buy something that moves up in value to offset the losses in the currencies that they're holding. Here's another graph of the same thing. You can see this big surge in central bank purchases here. And this was interesting. Gold has overtaken US Treasuries as the world's largest foreign reserve asset. So as the price of gold moves higher and higher, it just becomes more and more valuable, and it's now the largest foreign reserve asset beyond overtaking US Treasury securities. So a lot of people didn't see that coming. So here's what gold looks like on a monthly graph. You can see that parabolic rally in the last several years in particular. So just give some context on that. And this is a good one here. This gives us an idea that you're looking back in time at the prior bull markets in gold. You see this period here, the green histogram bar, this other period here, here, here. And now here we are. Excuse me. So what that's telling us is just based on what gold has done in the past during bull markets, perhaps there's a good chance that we are just in the early innings and the early stages of a major bull market. And again, past performance doesn't guarantee what's going to happen, but still, this I think gives us some indication that gold could have a long, long way to go. Here's some context too. Gold in relation to the stock indexes. This is going back to 2021. You can see gold here clearly way out front of any of the major stock indexes. You can see the Qs and the SPX and the IWM. That's the Russell 2000. So that's your mid cap market. And then here's metals versus the S&P 500. What's interesting about this goes back to about 6 months, I believe. This black line here is the S&P 500. But if you look at the scale, it almost looks like a flat line, like it's done absolutely nothing. And I guess in comparison to some of the precious metals, that's true. So there's been a lot going on in the precious metals. You have silver up 100%, gold up 42%, platinum up 58, and then meanwhile the S&P up maybe 2%. So there's a lot going on behind the scenes if you haven't been paying attention to the precious metals. So key assets here, year to date. So you can see the purple bars here are all of 2025. Look at gold, 2025, 67% gain or so. And then, you have your stocks that did, quite well as too here, over 15%. And then year to date here is the blue, and that's from mid-February. But you can see gold here still winning, winning the race. But it's fun to keep these things in context. That's the whole point. And how about technology? Well, you've got gold here in the last 3 months up 23 something percent. And meanwhile, you're lucky to be break even or above water in the Mag 7 stocks. So, there's definitely a shift going on there. And I think meanwhile, gold, we'll look at silver in a second, is certainly benefiting. Largest assets in the world? Well, if you didn't know it, gold. I should have asked that question to start with, although the answer would have been easy. Gold, so largest asset in the world, over $36 trillion in size. And what's second? Silver, right behind it. Compare that to Nvidia, just under 5 trillion in size. So I know the big tech companies make all the headlines, but really the sizable assets here don't often get as much press as you would think. And there's a lot of reasons for that, but um, let's look at ETFs, by the way. ETF flows for gold, they've surged by 23 times since 2024. So 2024, they were 4 billion of money flowing into the gold ETFs, and then they ran up to almost 90 billion last year. So you're getting some adoption into the ETF space as well, and interest in gold in what you call just the in the security side of things. Here's Alan Greenspan again. He says, yes, gold is a good investment. Of course, he didn't always talk like that when he was Fed chair, which is interesting. And in retirement, he talked more about favorably about gold. He said it's the premier currency. No fiat currency, including the dollar, can match it. And he's right. And this is Luke Groman. He's a money manager. He's an analyst. He's got a lot of good insight. This was interesting here. He says gold has outperformed the S&P total return over 1 year, 2 year, 5 year, 10 year, and 20 year basis. Basically, his entire career, he says, I've made more money sitting in gold than owning the S&P 500. So very interesting to think about that. We don't always think about that. We think you've always got to be all in stocks. And that can work. That can work at certain times, but that's part of what we're talking about here is maybe diversifying a bit. And this is a great chart here. The gold market capitalization as a percentage of the global stock market. So what we're saying here is gold prices are still low versus the global stock market. And here we are right now. And you can see other times in history, World War One, World War Two, and the end of the deflationary decade of the 1970s. So basically, gold, according to this chart, is still dramatically undervalued in relation to the value of the global stock markets, the aggregate of all those stock markets. Here's Peter Schiff. I'm sure a lot of you are familiar with him. I actually met him a couple of times and ran into him again in Miami at the Latino Wall Street event last year. That was kind of fun. Anyway, he says, here's something to keep in mind. I like this last bit here. He says, think about this. Gold's current trajectory may seem meteoric, but it pales in comparison to massive gains in the 70s when it went from 35 an ounce to over 800. So the percentage gain there was absolutely enormous. And that's sort of what this relates to back here. I don't want to go too far back right here. So it could be in the very early stages right now, even though we're definitely in a bull market. Certainly some of these other experts as well are thinking we've got a long ways to go. So in summary, with gold, you have the US debt monetization, increasing the money supply, and that just decreases the value of the dollar. And that drives up the price of gold. Central banks continue to accumulate gold. And some of the BRICS are de dollarizing their foreign reserves and putting money into gold. So cashing out their dollars and buying gold. Also, investor demand for gold ETFs. We talked about that, up 23 times. And this second bullet here, I didn't mention it, but this is important. Wall Street banks have formally added gold to their model portfolio allocation. So it used to be like 60-40 with stocks and bonds, but now they're actually suggesting up to 20% in gold. And that's been a huge boost, I guess you could say, and will continue to be. And then you have US budget deficits really don't show any sign of decreasing, and the Federal Reserve will continue to monetize the debt, essentially continue to print money. So, with that said, we're going to look at silver here. It's the second largest asset in the world. And back in 2024, we did a presentation. We talked about gold and silver, and we were asking people at the time when silver was in the low 30s, we were speculating, would silver follow the rally in gold to challenge the 2011 all time high near $50? If you remember, silver was very close to $50 in 2011. Well, yes, it did challenge that high and a lot more. It ran up to over $120 here. So again, you see that sort of parabolic move, and then it's pulled back a bit. And these are some very, very big moves. You can see you were down here, 2024. Yeah, right here. It's kind of where that big breakout started, just above $30. So just giving you perspective there. So industrial demand. Now this is really interesting. Tony even mentioned batteries. So Samsung develops a silver-based battery for electric cars. It can do 600 miles and charge in just 9 minutes. Says the current EV market alone would consume 64% of annual silver mining, but we already use all the silver we dig up. And how about this? 40,000 tons of demand, but their current production is only 25,000 tons. So again, that's all relation in large part to the new battery technology using silver. So you get 1 kilogram of silver per battery, the Samsung battery that's developed. It looks like China, the rumor is that they probably um, conveniently adopted the same technology Samsung did. Maybe a little corporate espionage there, but anyway, so it looks like they're probably going to use the same thing, and I'll show you that in a second. But this is interesting. Samsung already locked in mining offtakes to secure physical metal, so they're buying their own silver mines. And now you have China with new export controls. And then it says here there were rumors swirling that BYD were eyeing silver-based solid-state technology as well. So BYD is the largest manufacturer of electric vehicles out of China. So this is how you build a permanent price floor with massive, irreplaceable industrial demand. And then it turns out that, again, reports surfacing that China's BYD, the world's largest EV maker, announcing a silver solid state battery program. Also, uh, implementing export controls. They're not going to export. They're going to use all the silver for themselves. So if these reports are confirmed, even we aren't bullish enough, according to this tweet here on X. So this was, I think, in December or January. But here, look what happened here in February. Here you go. Here, the rumors were true. BYD breaks ground with solid state battery power for their 2027 EVs. So actually, everything that was being projected, it looks like it's coming true with the industrial demand for silver as it relates to the batteries. Here's someone suggesting silver up to 1,000 based on the Dow to gold ratio and the gold to silver ratio. It's difficult to put price targets on these things, but this could be the beginning of a hyper parabolic super cycle. And there's some credibility to these big claims, that's for sure. And here again is a monthly silver chart. Again, big parabolic moves here. So just kind of reminder of, kind of makes this move here looking very minimal, but that was actually a pretty big move as well. Like I remember trading silver at less than $4. So I've been I've been around a long time. And here, Citibank surging. They're suggesting silver in the next beginning of this year, I think, to 150. And China buying still has legs. So okay. So with that said, if that gets you somewhat interested in gold and silver, maybe giving you food for thought, maybe something you hadn't thought about doing, you might be thinking, well, how do I get involved with what they're talking about? So here's what we do and how we do it and how to buy gold and silver. We talked about futures contracts. So here are the gold contracts available. They're available in four different sizes: 1 ounce, 10 ounce, 50 ounce, and 100 ounces. And they all have these different names: 1 ounce gold, the micro, the e-mini, and the gold futures. So basically, there's a size of gold contract to fit anyone's trading budget and risk capital. So we'll look at the 1 ounce gold futures contract, kind of a small bite, as they call it. In fact, let me skip that. I'll look at the 10 ounce contract. So here's an example: a 10 ounce contract of gold. Let's say gold's trading around $5,000. Okay, so if you want to buy a 10 ounce gold futures contract, the margin on that, now that's a deposit, it's a margin deposit, is $390 currently. It can change, and it does change based on the volatility and the price of the gold. But essentially, with 10 ounces of gold, then I'm sorry, that's not a 10 ounce, that's a 1 ounce contract. That's a 1 ounce contract. Forgive me. So yeah, I am referring to the 1 ounce futures here. So you have a 1 ounce contract of gold. So $390 controls $5,000 worth of gold. That's with gold trading at $5,000 per ounce. So you have the efficiency ratio of 13 to 1. So if you compare that to an ETF, if you want to buy a gold ETF, that's fine, you can, but you have to actually invest $5,000, and you have no leverage. You have no benefit or no advantage in terms of your efficiency. So much more efficient with futures versus just an outright purchase of an ETF or a security. And then here's some other examples. Again, we looked at the 1 ounce gold contract briefly. Here it's currently at around $5,200. Margins 358. And here's micro gold. So you can do a 10 ounce contract. And of course, the margin is 10 times higher. So $3,600 per contract, but that controls $52,000 worth of gold. Then you could do a 50 ounce or a 100 ounce contract. 100 ounce contract gets you $520,000 worth of gold, and the margin $35,000. So we kind of highlighted these because these are, I guess you could say, they're very user friendly. The margin's not that high, but you still maintain exposure to the gold price. And you can also add other positions incrementally, or if you bought maybe 5 1 ounce contracts, then if market were to rally somewhat, you might want to sell 2 or 3, maintain some others, whatever it might be. So it just allows some flexibility there. So you've got gold versus micro gold. And here's an example. If you had a $15,000 investment, you could buy $15,000 of the gold ETF and have $15,000 in gold. Or you could use a $15,000 account, buy one micro gold with a margin of only 3,500, and that controls $52,000 worth of gold. So here's a scenario: if gold goes up 10%, you would make $1,500 with the GLD ETF. But meanwhile, you would have $5,200 in a micro gold contract. And here's a 20% gain. Again, it's kind of 1 to 1 with an ETF, but with the leverage involved with the gold contracts, you've got about 7 to 1 in terms of your margin efficiency. So hopefully that makes sense. I can review it a little bit more later, but I want to get through without going too far on time. I know it's evening for most of us. Okay, so here's silver. Which contract size would fit you? Okay, here's silver trading at, in this example, $80. Here's a 100 ounce silver contract, and the margin is about $1,400. So With $1,400, you would be able to control a contract of silver that has a value of $8,000. So 6-to-1 efficiency. Of course, with an ETF, it's just 1-to-1. So here you have the 100-ounce silver contract, margin just about $1,200. Silver is at 88 per ounce, so you've got $8,800 worth of silver in that case. You could have a larger size contract. There's a 1,000-ounce contract with your margin at 12,000. You have $88,000 worth of silver, and so on and so forth. We certainly have people trading the full size contracts, like in this case, the 5,000 ounces of silver. But it really depends on your risk capital and what your plans are. But I think it makes sense sometimes to have some of the smaller contracts so that you can maneuver sometimes and not have to make a decision where you get into or out of your entire position, all at the same time. We like to scale into and sometimes scale out of positions incrementally. Now, here's the secret market I talked about. It's copper. Oh, excuse me. So, biggest opportunity hardly anyone ever talks about in copper. It's not a precious metal, it's an industrial metal. So, this is interesting here. Copper has outperformed the S&P 500 in this particular case, where you see where the ratio is, copper relative to the S&P 500. So right now we're down at this level here, and the last time this happened, copper then outperforms the S&P by a ratio of over 5-to-1 in the next decade. So here's what it looks like on the graph. So basically, when you get down to these levels where we are now, the copper market tends to explode. Doesn't mean that's guaranteed to happen, but historically that has happened. And then here's a piece, an article here. Copper has a new bull case coming from billionaire macro investors, not mining CEOs. Stanley Druckenmiller says he's in the tightest position I've ever studied. Shabath, and I always mess his last name up. If you've heard about him, he's been kind of a tech um, talking head or pundit, you should say, and investor. Electrification makes shortages inevitable, and copper should go parabolic. And here's mining legend Robert Friedland. Investors still don't grasp the scale of the problem. You just can't own enough copper. We're consuming 30 million tons a year to maintain our current 3% GDP with no electrification. Then we have to mine the same amount of copper in the next 18 years as we mined in the last 10,000 years combined. So, and Stanley Druckenmiller, if you're not familiar, he generated 30% annualized returns for 3 decades and never had a losing year. So he's moved on from AI and he's doing this instead. He says, we own copper. It's not a genius trade. There's no supply coming on in a meaningful way. It's very tight the next 8 years. And you have a big add on from AI and data centers. We're not long copper equities as much as we just keep rolling the front end. And he's talking about futures contracts. So he's trading copper futures. So his playbook is long copper and long gold. You can see the yellow highlights here. He says AI data centers are creating massive incremental demand for the metal. It's the backbone of electrification. Every data center, every EV charging station, every grid needs it. Supply is locked and demand is exploding. And actually, there's one other thing they didn't mention, but it's kind of on the darker side, the darker use of copper, and that would be in military applications. I believe there's hundreds of pounds of copper used in a lot of the arms and munitions and sort of the missiles and so forth too. So very interesting there. And then again, he says no meaningful copper supply coming online in the next 8 years. AI and data centers adding demand, not into copper equities, but he's trading futures. Copper just makes sense. So that's his one man's opinion, but I think there are others that we can listen to and probably find very credible as well. So copper contracts, which size would fit you the best? They've got mini copper, micro, e-mini copper, and then the COMEX full size contract. So 2,500 pounds, margin is $1,200, and that gets you just under 15,000. dollars worth of copper in a micro copper, and then you have the mini margin of $6,000 with about $74,000 worth of copper per contract. So you see the leverage there involved, where a relatively smaller amount of money controls a very large amount of value. And just to kind of summarize here, you've got the micro copper, you've got the 1 ounce gold, you've got 100-ounce silver, you've got micro gold futures. So anywhere from maybe 400 up to $3,500 in margin for having exposure into the smaller sized contracts on these metals, that includes copper. So here's an example of what an account might be able to trade. So if you had a $25,000 account, and again, these are just examples, but you might buy one micro copper, and that gets you $15,000 worth of copper. You might buy one micro gold, that gets you $52,000 worth of gold. So in summary, that $25,000 account allows you to control $67,000 in value between copper and gold, and your total margin requirement is still less than 5,000. And here's a second example where maybe you actually have copper, silver, and gold. And again, these are just examples. You could buy one copper, two 100-ounce silver, and 4 contracts of the 1 ounce gold. So you have that $25,000 account, and you'd have $53,000 worth of precious metals in that account, split up between some gold and silver and copper, and still your margin requirement is less than $5,000. So a very prudent way to go about it. You're not over leveraging, and that's what we like to do. We don't want to go in with too much leverage, so that you have a little bit of staying power. Here's a $15,000 account. Remember, this was a $25,000 account example. You could still trade a micro gold, giving you exposure to $52,000 in gold. Or here's another example. If you want to spread yourself out, have a micro copper, a 100-ounce silver, and then a 1 ounce, 2 of the 1 ounce gold contracts. So you've got $34,000 in value of metal value, with $15,000 in your account. So hopefully that's making some sense. And I want to remind everyone, we do more than just metals and gold and silver and copper. We can trade any of the markets we kind of briefly mentioned earlier, whether it's a currency or agriculture, or we call trading places orange juice. We do orange juice, although not often. It's kind of a thinly traded market. But the big markets, you might hear about, crude oil. Maybe you heard about something in the grain markets. Maybe you've heard about treasury futures, U.S. treasury bonds, or currencies, and of course stock index futures. So anything that's a commodity futures and options contract. And one thing we do, and this is kind of shifting gears a bit, but we have some technology we developed specifically for trading stock index option spreads, and we use automation. So this is kind of shifting gears from the precious metals that we just talked about, but it is something we do offer. We have a lot of clients involved with this as well, so I thought I would mention it. So we use automation trading the stock index futures options markets. And what I mean by that is the Russell 2000, the NASDAQ 100, and the S&P 500. So we're trading options on these markets. And as you might know, there are long option strategies where you pay a premium, and it's called maybe a debit or a debit spread, even if you're doing a spread. And you might just simply, if you're bullish, think the market's moving up to this blue line, you might buy a call option, or you might buy an option spread with some calls. Or if you're bearish, think the market's dropping, whatever it may be, down to this level, you might buy some puts, or maybe you buy a put spread. Either way, you're paying money to buy some option exposure where you pay a premium. So those are long option strategies. But there are short option strategies. Obviously, if you're buying options, then some other entity is selling it to you, so they're short the option. So they collect the premium that you actually pay. And of course, if you're bullish, some of the strategies might be, well, if you don't think the market's going down, you might sell some puts below the market and collect the premium. Or if you're bearish and you don't think the market's going higher, maybe you sell some calls up at this area here, collect the premium, and the market keeps dropping and you get to keep the premium. But there's also a strategy and many strategies. What happens if the market's going sideways? This non directional approach. So markets don't have to always go up or down. There are strategies with options. And a lot of the professional traders use these non directional strategies where they're collecting premium. So, how would you like to trade stock index option strategies? Same strategies that professionals use with only one touch of your phone. So, this is the convenience I talked about, and there's no screen watching needed. You'll receive trade alerts on your phone, and these alerts are live, meaning they're integrated with your Altavest trading account. So, you receive that alert on your phone or email. And if you like the trade, you just touch accept. If not, you just touch reject. And our technology handles the rest for you. Just that simple. So here's an example. You get a text message alert on your phone, and you'll go ahead and you'll just touch that link, and that link will take you right to the alert page that's associated with your account. In this case, it happens to be a non-directional strategy. You see the red line here and the red line down here. Those are the calls and the puts that you'd be selling. You want the market to stay in between those red lines, essentially in that range. And you're collecting premium for selling that spread, a professional strategy. You can see the quantity is all pre-selected for you. You can see the number 7 there, but that's all pre-selected based on what's in your account already, what other positions you have, and how much margin you have available. But you could always lower that amount if you'd like. You cannot increase the risk. And gives you the idea of how much money you're collecting, what the uh, margin is, what the cost is on the trade, and so forth. And you like it, and you just touch accept. So just wanted to make sure you were aware of that service and that functionality we have with the automated options trading as well with the stock indexes. So here's everything that we offer, how to get you started. So what we do with the precious metals and really any of the markets, but we focus, of course, on the metals today, is work with you one-on-one. We offer private training, coaching. We develop trading plans. We're all Series 3 licensed. That means we are licensed, and we've been doing this for many years. So we're licensed and we're experienced, and we'll put together trading plans for you that meet your goals and the amount of capital, risk capital that you want to work with. So, what is the retail cost of a professional trading coach? Well, I looked it up. I think this was it Grok or Chat GPT? I can't remember. Comprehensive packages with experienced mentors typically range from $5,000 to $15,000 for a 6 to 12 month period. So, I think it's fair to say to have a personal coach, a value of at least $10,000 is a fair assessment. Have a co-pilot, have someone to chat with, develop trade strategy, discuss your trades. Actually, that's just as important. Look at the history of what you've done right, what you've done wrong, and perhaps how to make improvements. So we think $10,000 value on that is very reasonable. And then I mentioned those one-touch options trades that come right to your phone, and everything's integrated with your account. It's seamless, it's user friendly, and once your trades are filled, then our strategy here in our, I guess you could say, our technology will automatically manage the trade for you. So there's no screen watching. So you'll have profit targets and risk targets in place, and your trade will be automatically scanned every day, and then orders will be placed for you and your account um, once those targets are hit. So this is a tremendous service here and a value of $4,400 for that trade alert technology that we just briefly looked at. And then, of course, there's more. We have futures and options education. We call it our master class. So we'll give you a training on futures and the basics and the overview with some more illustrations and examples on how margin works and so forth, if you're not 100% clear on that. And then, we look at stock index futures versus the cash index and options and more options and advanced strategies and so forth. So all of that education, and we have our proprietary research. We put this on 1 or 2 pages a day. We follow the global macro landscape so that you don't have to. That's what we do. That's our job. That's our role. And we put together a nice brief short, concise package, and it's available to you through the website, and also gets emailed. So really, in 2 or 3 minutes, you can see exactly what's going on. You're busy, you've got busy lives, things to do, and we don't want people overwhelmed thinking they have to spend hours and hours trying to figure out, Wall Street speak and that kind of thing. This is plain language, and it just gives an idea of what we're doing and what we're looking for and how we're positioned and what our advice is for the near future. So that's our TradeScope newsletter. So you get TradeScope and our masterclass futures and options education. That's all part of what we offer, valued at over $2,900. So you get the personalized trading plans, you get the one-touch trading alert technology and the automation, and the education and the research, valued at over $17,400. So that's called our Gold Rush 2.0 package. And of course, that's not what we're offering it for. And we used to offer our trading alert technology actually when we did in-person events before the pandemic, and we'd have seminars and people would come to the back of the room, and it was $4,000 at the time. And that's not what we're going to offer it today at. We're going to do much better than that. This is our retail rate, but we're going to do even better than that for our Wall Street, Latino Wall Street friends here. Only $497, and you'll have that package available to you. It's only one payment. So I want to make clear here that's only one payment, $497. And there's the link, and I think they're going to put the link in the chat as well. And that's your first step into getting signed up, and we'll get you onboarded, and you can have discussions with us, get your login credentials, and we'll get you on your way with the trading plan and get you started. But that's the link there. Take a screenshot of that if you like, and I know they're going to put that in the chat as well. And then just a couple other things I want to, before I forget here. There are some benefits to futures that you don't necessarily get elsewhere. You have tax savings. You can use your self-directed IRA. There's no pattern day trading restrictions, and of course the diversification. So the tax efficiency, let me briefly mention that here. So all of what you do with futures and futures options, the IRS considers those part of Section 1256 is what they call it. And that means 60% of your gains are taxed at the lower capital gains rate. So for most people, your capital gains rate will be lower than your personal income tax rate. So that makes a big difference. You end up saving perhaps in the aggregate 10% versus, say, if you're just trading stocks in and out. So it can add up to some big savings. There's no more itemizing, so you don't have wash sales or anything like that when you do futures. So people ask about this, but you get a 1099. It has your profit, just one number, and that's all you need to do your taxes. Always consult your tax attorney or advisor, because we're not experts in that. Also, your self-directed IRA you can use as well to trade with. We work with Equity Trust. We just did a webinar with them a few years back. They have like 71, I think it's like almost 80 billion now in assets under management. But you open an IRA and with them, with Altavest, and they will waive the setup fee for you. So that's pretty cool. And excuse me here, folks, I got a frog in my throat. Trading account types, all the usual, just like any other brokerage firm. You mentioned IRA, individual joint, corporate, LLC, trusts. We can do all the above. If you have faced pattern day trading restrictions, don't worry about that in futures and options. I won't go into the details on that, but that doesn't exist with what we do. So I'll just skip over that. But we think alternatives, that's what this is called, basically alternative asset class when you're trading futures, gold, silver, some of these option strategies may improve diversification, lower portfolio risk. Keep in mind stocks don't always go up. Remember how many of us, raise your hand if you remember the .com era. But unfortunately, look at that sell-off here. NASDAQ dropped about 80%. And if you were unfortunately buying at the worst possible time and just did nothing, it took you 15 years to recover. But meanwhile, I wanted to point out, look what gold did during that same period of time. So, gold took off. And so it might make sense. I'm not suggesting there's a crash coming, but it might be good to be there in advance with some gold and silver, maybe some of these precious metals. And that is the end of it. I'll leave it right there, everyone. And I'm sure there's a few comments and questions, good, bad, or otherwise.
Yeah, thank you. Thank you, Eric. Yeah, there's a bunch of questions, so let's try to get to some of them. One question from uh, Angie. Angie asked, "How much is it?" So here's the answer to that. It's 497. It's an incredible value to be able to work with these guys for the next year and get your account all set up and have guys with decades of experience who are licensed to really help you. Let's see, what are the other questions? Is this packet, is this for training? So yeah, you get training, but then you also get access to their proprietary software. So there's also the
Right.
software where you get the text messages, the alerts. There's master classes. There's some digital downloads. There's one-on-one private coaching that's included. If you go to the link and you enter in your phone number and email, you'll go to the next page, and then that is going to outline basically everything that you get. But I don't know, Eric, do you want to
Right.
talk about what everybody gets?
Yeah, no, that's a great summary. I think a lot of times people are a little bit hesitant to get involved with something like this because they're not familiar with it and they've heard the term, but maybe they've heard some things that aren't necessarily true. So, this is a way to get involved. And again, we do this every day. So, we'll set up a one on one training program for you and we'll do screen sharing sessions. That's one good way to do it where you share the screen and kind of walk you through. And you'll say, I have X amount of risk capital to work with. What can we do in the precious metals? And we'll just put a couple scenarios together for you and we go from there. And then um,
One of the
essentially,
other funny questions I have here is
yep,
from Patricia, and she says, "Unfortunately, I don't speak English." So that's one of the great reasons why we were excited about this partnership with Eric, because we have so many people in our community where they want to learn from Latino Wall Street, but they have their husband who wants to learn, or they have their wife, or they have their kids, their daughter-in-law, their cousin. They have people in their life who are important, who are special to them, and a lot of times in their family or coworkers, and they want to learn from us. But until now, they didn't have an opportunity. So we're really excited for this partnership, Eric.
great. Yeah, great to be involved. Absolutely.
And you'll also get, I mean, listen, if you're, let's say you're in some other Latino Wall Street programs and, you speak a little bit of English, but you're scared that, oh, I might need some support in Spanish, our customer support is always available 24 hours a day, 7 days a week. So if you get stuck, our team is always here to help and help bridge that gap. Um, China's creating a big part of the silver demand. Is there an
Right.
app? Kenny is asking, is there an app, or how does the technology, how does the software work? And
It's all browser based. So we provide the login credentials that you need for your account, and that's all you need. It works on any browser.
very cool.
Right.
Very cool. And then the text message alerts, those go out automatically, or how does that all work?
Right. So you'll receive those alerts, and those will come to your phone and via email. And here's another question. I'm kind of asking my own question and answering it, but I'm sure a few people out there are thinking this. How many alerts do I get? How many can I expect uh, per week, per month, or whatever it is? But certainly, this is not day trading, and it's not even what you would call high velocity trading or swing trading at all. So, a lot of these strategies take maybe a month to mature in
Mm,
terms of the alerts. So you might receive one or two alerts per week. So you don't have to be glued to your screen. All of our clients at one point or another have told us, um, "Oh yeah, I got that alert from you guys. I was at the checkout line in the grocery store and I accepted." Or I'm a pilot and I'm flying a 747 and I accepted from the cockpit. We get that. Or I'm on the golf course, or I'm in line picking up my kid from the school. So you're going to enjoy the convenience of those alerts, but also not overwhelmed at the same time. And then once you have the alerts accepted and the order gets filled, then again, our technology will track that position for you if you choose. We're not trading on your behalf, but you have to give us instruction. Basically, it's almost like having a stop loss and a profit target in place in advance, is essentially how it works.
Cool.
Yeah.
Yeah. Someone's asking, my spouse doesn't speak Spanish. Is this similar to what's taught in Latino Wall Street? So I think it's similar, but it is different. I mean, futures is a completely different program. It's something that it can be very risky and volatile. We've run some pilot programs in the past, but we didn't continue to teach it just because it's very advanced. And that's why I'm excited because your software makes it really easy. So this is something different than what is taught in Latino Wall Street, but it's a lot of the same fundamentals, and it is another way to invest and take control of your finances.
Yeah, and I think one comment on that, remember these futures contracts and these options contracts, they're just tools. They're just things. So it really depends on how you approach them and how you use them. And I think a lot of the stories maybe all of us have heard over the years about maybe trading commodities or futures, and people use that phrase interchangeably, and that's fine. But it's just when people over leveraging themselves. That's why I give some illustrations there with different size accounts and how you're not anywhere close to being over leveraged, um, but you still have the exposure. So that's a big part of it. It's having the right approach to begin with, having a trading plan, having some idea where you're going to get out
Yeah.
with the stop. A lot of times people will, this is what happens, whether it's securities or futures, if someone buys a XYZ stock, okay, um, they buy something for $50 a share and it goes to, 48 and it's okay. I'm losing on 45. Well, I don't know. Well, I just read something that said it's a good buy here, and 42, and then, well, gee, that's not good. I'm losing more money than I thought, and goes down to 40. Well, I have a friend that told me it's a good buy, and I just read something next week. I heard someone on TV talking about it, and by the time it's at $30 or something, you bought it at 50. You're thinking, well, I guess at this point I'll just sit on it and see what happens. And then you end up sitting on it, and you really had no trading plan. You kind of just let the market trade you, and you followed too much noise. You were too distracted. So
Yeah.
really, you have to have discipline, and you have to have a trading plan before you get into the trade.
I have some like kind of two questions that I guess are a little similar. So one saying, so this is not day trading, then will the alerts be about an active portfolio? And then the Monica is also asking, I currently do scalping. Is this software something that can help me? So we teach scalping and we also teach day trading, like those strategies, either, getting out within a few hours or getting in and out within a few minutes or seconds. So would you classify this as day trading or scalping or what?
No, not even. No, no, not even close. On the other end of the spectrum, this would be like maybe like watching paint dry sometimes. Um, so the gold and silver trading and so forth, yeah, those markets are moving a lot. That's for sure. But the idea is we're not trying to get in and out of them every hour or every day. We're just trying to build a position and maintain it. And then as market cycles shift, then we can adjust and adopt our positioning to adapt to those different changing market cycles. So, and in terms of the option strategies, again, those are things that are going to take sometimes 30 to 60 days to mature per trade.
Or like
So you're going
swing trading? Somebody's saying more like swing trading.
a much longer swing trade,
Another
certainly.
question we're getting, okay, I have about $15,000. What's the minimum to invest into your portfolio?
Yeah, that's and again, it's really up to you in terms of risk capital. So I guess the answer there is you have 15,000 of risk capital, and you saw a couple of examples, I guess, on what you might do in the precious metals. You might have a 1 ounce gold, you might have a micro silver, maybe a mini, copper, something like that. Um, so you could have definitely exposure into the precious metals with an account that size. That's for sure.
Cool. Another kind of similar question. Jessica says, I have 10,000 to invest. Will they help me set everything up? Or I have to learn it on my own in order to do it by myself?
No, no, that's what we're here for. That's our job. That's our role, is to put a trading plan together, a course of action, and work with you depending on the number of the amount of risk capital you have. So yes, you can do some of these things with 10,000, but you wouldn't be able to do um, a lot of everything. You'd have to maybe have a 1 ounce gold contract or two, and maybe a mini silver, and that would be enough leverage. And if you did too much leverage, then you might end up in a position where you're kind of watching the account and seeing the movement, and the dollar is moving up and down, and you might not like. You have to be able to just realize that when you're trading anything, um, you have to be comfortable with it. So that's why we always mention it needs to be risk capital or speculative capital.
Yeah, don't bet the rent money, not the mortgage money.
Right, right, right.
Okay, cool. Let's see what else. Once the trade has matured, how immediately can someone withdraw or access the capital?
Well, all of the accounts are in your name. These are all, nothing that we manage for you. There's no problem with liquidity. So if you close out a trade, the cash and liquidity is available the next day.
Cool. Very cool.
Yeah, good questions.
All right, great. Well, thank you guys. If there's any more questions that anyone has, send us an email, info at Latino Wall Street. We are always here to help 24 hours a day. And Eric, I want to thank you again for doing this. I'm so excited for this program. And yeah, I will see everyone on the inside. I don't know, Eric, if you want to, any last words of wisdom before we say goodbye?
Well, no, I think, yeah, all right. People can email me if they'd like to, if that's
Of
okay, or
course, yeah.
whatever you want. Yeah, Eric, Erik, at altavest.com. Do you want me to put that in there, or
Yeah, put it.
I can figure where that is here. Okay. Yeah, so feel free to email me. We're all very approachable, regular Joes, as they say.
I think I put it in there. Eric at altavest.com.
Yeah, that's it. Erik. Yep. And reach out to me if you'd
Oh,
like.
you can also convert IRA and tax advantage accounts. So if someone has
Right.
like an IRA or 401k or something with their job, they can move it over and transfer it.
That's right. We get that every week. People are moving their IRAs. So self-directed IRA, again, we work through Equity Trust, one of the best in the business, and they will waive your setup fee. It's normally, I think, like 250 or $300. So that's a good savings right there. But you have to let them know you're from Altavest, because we've worked with them for many years. But yeah, the main thing would be reach out to me directly with my email. And in the meantime, you can use that link and go right to the page and submit your info, and that can get the ball rolling for you as well. I'd love to see you engaged. If this is something that has been of interest to you, then we can certainly help you out and get you involved.
Yeah, so on that same note, Andre is asking, so I can take money from my 401k and I will not be penalized. So I'm gonna speak, I guess, Eric, my understanding is, yeah, you can move it from that account. It would still be classified as a retirement account when you move it over, but you'll be able to trade it a little bit more aggressively. One of the problems with a lot of these retirement accounts, if you just kind of do what your job tells you to do, is they put them in these accounts that have a lot of fees, don't really
Hmm.
grow that fast. They're super, super, super conservative. So by the time that they're done taking their fees, I mean, you're barely making any money.
Hmm.
Whereas here, you can convert it over, and then you can start trading, and so you can grow that retirement account faster. It still would be classified as a retirement account, So if you took the money out for personal use, you get penalized. But converting it from wherever it is now over to Altavest and their platforms, my understanding is there's not a penalty, right?
Yeah, there's no penalty from us, and I mean we don't have anything to do with that. But yeah, if you're just transferring, uh, a what are they tax deferred account of some kind, a qualified plan as they call it, an IRA for example, and you're transferring it from wherever it is now to us, and that's called a self-directed IRA, then there's no um, fallout or anything regarding that. I mean, I guess if you were withdrawing money from an IRA before the age limit or something, then that would, I guess, that you'd have to talk to your tax guy, attorney, or your tax preparer. There's probably penalties for that, but just transferring an IRA from one custodian to another wouldn't really trigger any issues.
Yeah, yeah, making a transfer wouldn't have a penalty. Uh,
No.
okay, Maritza's asking, uh, myself, I have to learn from the beginning. Yeah, so is this good for beginners? You think if someone's just getting started, is this a good place to start, or do they have to have some sort of degree in computer science and stuff
No,
like
no, that's why we have the education. There's 6 or 7 different chapters of education on video, and they're short and sweet. There's no lingo or jargon that's over anyone's head. Just what you need to know and nothing more. And then beyond that, that's why we are here, and we'll develop a trading plan for you based on what your interest is and the amount of capital you have. And absolutely, you can do this.
Cool. We have two more new questions. How long is this promotion running? I think we're just running this promotion for the end of the month, so I definitely lock it in with this discount. You could always do it, but you'd have to pay the normal price, which is higher. The other question, how long do I get to keep the program? So if they buy it, they keep it for life, the
Right.
video? How does that work?
Yeah, lifetime. You have lifetime access.
Oh, that's incredible.
Yes.
So there's access for life.
Oh,
And
and one other
And
thing.
it's
Sorry to
not
cut.
recurring, right? It's a one-time payment.
I was just gonna say, people will sometimes suggest, "Oh, well, I pay this one time, and then I have to pay some subscription of some kind every month." That's not true. It's just a one-time, upfront, lifetime, membership, so to speak. So that's it. There's no monthly subscription.
Beautiful. Great. Wow, that's amazing. And once they get into the platform, you said there's videos and there's all sorts of stuff that they can learn. And
Right.
they
Right.
can do it fast. They can watch everything, they can binge it like Netflix,
Right.
or they can take all their time because it's not like they're gonna get kicked out in a year or something. They have
No.
lifetime.
No. That's right.
That's great. Okay, great. Well, I think we covered a lot. Everyone has Eric's email, and obviously you have my email as well. If you have more questions, but yeah, we're really excited to see you guys on the inside. And yeah, until next time, Eric. Thank you again for your time, my friend. And everyone, stay safe. Don't let the news scare you too much because there's a lot of insanity on the news. But with great disruption comes great opportunity, and at the end of the day, you're gonna look back just like we look back on the Iraq War, when we look back on the dot-com bubble and every other bubble and burst and crisis that we've had, COVID, right? How many of us
Right.
wish that we bought Bitcoin and gold during COVID? We'd be a lot wealthier if we weren't living on fear. So, times like this are times to think smarter, and think with your brain and not your heart so much. And
Right.
and yeah, and so thank you again, Eric, for doing this, my friend.
Good to see you, Tony. Thanks everyone for joining me, and reach out, use my email, get yourself to that link and submit your info, and then we can talk further.
Beautiful. Have a
All
good night.
right.